Hey everyone, I bet a lot of you have heard about this company, Grail, and their gallery test.
Yeah,
It's supposed to detect cancer super early, like way before you have any symptoms.
right.
But is it really the revolution they're claiming it is?
Hmm,
That's what we're going to find out today as we dive deep into Grail.
sounds good.
We've got company reports, market analyses, financials, all the juicy stuff.
Looking forward to it.
All the sources are in the description, by the way, so check them out if you want to follow along.
Yeah, definitely.
We'll also be teasing a pretty thought-provoking question later on that might just change how you think about cancer detection.
Ooh, I like it.
But first, let's get a handle on what Grail's all about. So they're aiming to make early cancer detection a reality.
Right. Yeah, and not just for one or two types of cancer, but like up to 50 different types, all from a single blood test.
Wow, 50. That's incredible. But how does this gallery test actually work?
It analyzes something called DNA methylation patterns in your blood.
Methylation.
Yeah, think of it like this. Every cell in your body has DNA, and methylation is like a set of switches that control which genes are turned on or off.
Oh, okay, I'm following.
Cancer cells have different methylation patterns compared to healthy cells.
Interesting.
And that's what Gallery picks up on. It uses these really advanced algorithms to spot these subtle differences.
So like a bloodhound sniffing out cancer.
Sort of, yeah.
How
It's
about-
incredibly complex, but potentially very powerful.
It all sounds so promising. But on the business side, is Grail actually making money from this technology?
Well, their revenue's growing like crazy. Last year, they pulled in $93 million, mostly from Gallery test sales.
That's a lot.
Yeah, and it's a 68% jump from the year before. But here's the thing, they're not profitable yet.
Really?
Actually, their losses are increasing.
Wait, so more revenue but bigger losses. How does that work?
It's pretty common for biotech companies, especially young ones like Grail. They're pumping a ton of money into research and development.
Right, to keep innovating.
Exactly. But it does mean the success of Gallery is absolutely crucial.
High stakes. So let's talk about the guy running the show, CEO Bob Ragusa. He's making almost $10 million a year.
Yeah, that's a lot.
But he's only been with the company for a couple of years and owns a tiny fraction of it. What do you make of that?
It's worth considering. He came in right after Grail split off from Illumina, so it was a big transition time.
Okay.
He's been focusing on getting those Gallery sales up. But yeah, it's definitely something for potential investors to look at.
So not a red flag, but maybe a yellow one.
I'd say so.
All right, we've got a CEO with a hefty paycheck and a company spending a lot of money. Time to look at their financial health. Their market cap is just under $1 billion, which sounds good,
It does.
but their enterprise value is actually negative, and their PE ratio is negative too. Is this a risky investment?
Well, first, got to remember that biotech is a very volatile sector, and Grail is still a young company.
That's true.
They're investing heavily in R&D, building up infrastructure, trying to make Gallery accessible. All that costs money.
But eventually they need to make a profit, right?
Absolutely. And that's where it gets interesting. Grail's operating costs are really high, partly because of those R&D investments, but also their sales and marketing efforts. Plus, most insurance companies aren't covering Gallery yet.
Oh, wow. That's a problem.
Yeah, it makes it harder for people to get the test, which of course affects how much money Grail can make.
So they've got a lot of potential, but some pretty big financial challenges ahead.
Yeah, that's a good way to put it.
All right, we're going to take a quick break, but when we come back, we'll dive into what the market is saying about Grail and their Gallery test.
Looking forward to it.
All right, we're back and ready to dig into what the market thinks about Grail and this Gallery test. We've talked about Gallery's potential, but I'm curious, what are people actually saying about it?
Well, it's a real mix, to be honest.
Okay, so some good, some bad.
Yeah, there's a lot of excitement, for sure. People see the potential, the fact that it could really change how we approach cancer care. Early detection is huge, right? If it works as well as Grail says it does, it could save a ton of lives.
Yeah, no doubt. But you said there's some negativity too?
There is. Some experts are worried that Grail might be exaggerating how effective Gallery really is.
Exaggerating. Why would they do that?
Well, maybe to pump up their stock price, make the company look better than it is.
Ah, I see.
And then there's the FDA thing.
Right, you mentioned that before, that they launched Gallery before getting FDA approval. Can you explain why that's such a big deal?
Sure. The FDA is like the gold standard, right? They're the ones who say, yep, this product is safe and effective.
Right.
When a product has FDA approval, it gives doctors and patients confidence.
Right.
But without it, there's always a risk. The product could get pulled off the market, or there could be all sorts of regulatory problems down the road.
That makes sense.
So it's a risky move. Grail's basically saying, We think the benefits of early cancer detection are so important that we can't wait for the FDA.
It's a gamble, for sure.
Yeah, they're betting that the potential rewards outweigh the risks, but it's something investors should definitely think about.
Okay, good point. Let's shift gears a bit and talk about who's backing Grail. We saw that institutional investors own almost half the company. What does that tell us? Are they confident in Grail?
Well, institutional investors are the big guys, right? Pension funds, mutual funds, that kind of thing.
Yeah.
They're in it for the long haul, not just a quick profit. They're looking for companies that have real staying power, long-term growth potential.
So them owning that much of Grail is a good sign.
I'd say so. It suggests they see something promising in Grail's future.
Okay, but then we have this really low insider ownership, less than 1%. Isn't that a bad thing?
Not necessarily. It's pretty common for a young company like Grail, especially one that's relied so much on outside funding. It's something to be aware of, but I wouldn't say it's a deal breaker.
All right, so we've got this mix of excitement and skepticism, a technology with tons of potential, but also some regulatory hurdles and a pretty complex financial picture. It's a lot to unpack. How do we even begin to make sense of all this?
Well, one way to analyze a company like Grail is to do a SWOT analysis.
A SWOT analysis.
Yeah, it stands for strengths, weaknesses, opportunities, and threats. It's a way to systematically look at where a company stands, what's working for them, and what they need to watch out for.
Okay, I like it. Let's break it down. What are Grail's biggest strengths?
Well, first off, they're the first ones to really tackle this multi-cancer early detection market. They've got that first mover advantage.
That's huge.
Plus, their technology is really innovative. All that stuff we talked about before, the methylation patterns, the algorithms, it's cutting edge. And they've got tons of data from their clinical trials, and they've partnered with some big names in healthcare.
So they're ahead of the game. They've got the tech, they've got the data, and they've got the connections. That's impressive. But what about weaknesses? What are they struggling with?
The biggest one is probably profitability. They're just not there yet. Like we talked about, they're spending a lot of money, and they're really dependent on Gallery for their revenue.
Right.
Plus, all those regulatory and reimbursement issues are a big problem. It's hard for them to make money when insurance companies aren't covering their tests.
It's like a catch-22.
Exactly. They need to get Gallery covered by insurance to make more money, but they need to make more money to really get Gallery out there.
Makes sense. All right, so weaknesses, check. What about opportunities? What could really help Grail take off?
Well, the market for early cancer detection is growing super fast.
Yeah, I can see that.
And if they can get FDA approval, it would be a game changer. It would probably mean more insurance companies would start covering Gallery.
Yeah, that would be huge.
Plus, there's always the possibility of expanding into new markets or even using their technology for other things besides cancer detection.
Interesting. So lots of potential there.
Okay.
But what about threats? What are the big things Grail needs to worry about?
Competition is a big one. There are other companies out there developing similar tests, and some of them have a lot more resources and experience.
Right, it's a competitive market.
And then there's the possibility that someone comes up with an even better way to detect cancer early.
Oh, yeah, that's always a risk with technology.
Exactly. And then there's the whole issue of overdiagnosis.
Overdiagnosis.
Yeah, if Gallery starts giving too many false positives, people might start to lose trust in it.
That would be a big problem.
It would. So yeah, there are definitely some serious threats out there.
All right, so we've looked at Grail's strengths, weaknesses, opportunities, and threats. It's a pretty complex picture. What's the bottom line? Should people be investing in this company?
That's a tough one. It really depends on your individual risk tolerance and your investment goals. What we've tried to do today is give you a balanced view of Grail, the good and the bad. It's a company with enormous potential, but there are definitely some risks involved.
No easy answers, huh?
Not with a company like this, but that's what makes it so interesting. And it brings us back to that question we teased earlier. You know, while Grail is focused on early detection,
Right.
it makes you think about prevention.
Prevention.
Yeah, what if this technology could help us not only detect cancer earlier, but actually prevent it altogether?
Wow, that's a powerful thought. It completely reframes the whole conversation.
Exactly. And that's what makes Grail such a fascinating company. They're pushing the boundaries, exploring uncharted territory. Whether they ultimately succeed or not, their work could have a ripple effect throughout the entire healthcare industry.
This deep dive has been incredibly insightful. I feel like I've gone from knowing next to nothing about Grail to having a real understanding of their technology, their challenges, and their potential. It's a complicated picture for sure, but definitely a compelling one.
That's what we aim for in these deep dives, to give you the knowledge and context you need to form your own opinions and make informed decisions. And remember, when it comes to investing, always do your own research and consult with a financial advisor.
Absolutely. We are not offering financial advice here. This is just a deep exploration of a company that could have a profound impact on the future of healthcare. Before we wrap up, I'm curious what stood out to you the most in all of this.
For me, it's that shift from detection to prevention. It's such a powerful idea, and it speaks to the transformative potential of Grail's technology. It's something I'll definitely be thinking about going forward.
I agree. It's a reminder that we're living in an era of incredible scientific advancement, and the possibilities really do seem endless.
And if you're as fascinated by innovative companies like Grail as we are, make sure you subscribe to the Stock Analytics AI YouTube channel for more deep dives into cutting-edge technologies and investment opportunities.
Don't forget to head over to the comments and let us know what you think. Is Grail a company you'd consider investing in? What parts of their technology or their mission really resonate with you? We'd love to hear your thoughts. And hey, while you're there, tell us about other companies you'd like to see us deep dive into in the future.
Just a reminder, the information we've shared today is for educational purposes only and should not be considered investment advice. Always do your own research and talk to a financial professional before making any investment decisions.
Thanks for joining us for this deep dive into the world of Grail. Until next time, stay curious, keep learning, and as always, invest wisely.